took just a year to crack Forex. So basically, a lot of people, when we start trading, we start with the wrong things first. So I didn't have enough capital to make me wealth. I hate fundamentals to the core. I try not to follow the metrics. The metrics always says one thing all the time.
Welcome. Thanks for doing the interview. Maybe you could just introduce yourself to the community, tell us a bit about yourself, how long you've been trading, that kind of thing, where you're from.
Hi there, everybody. This is Andile Mofokeng. I'm definitely from South Africa, representing the mother city. I've been trading for the past 5 years. Started trading around 2018. And I think I broke through into trading in about 8 months later. I took just a year to crack Forex because I just never followed what the metrics of the world says, that you have to take 3 years to make it in trading. You have to take 5 years and whatever. I don't know how I did it, but I just know that I broke through the metrics of how people look at this entire thing. But yeah, that's just it, man. That's it. I just managed to reach the progress of being successful entirely, from just trading. I never really did anything but besides trading.
Cool. Okay. Well, maybe you could tell us how you did that. What are your secrets?
Okay, that's a pretty tricky question. But what I could say is that let me just share a story about how did I make it in Forex. So basically, a lot of people, when we start trading, we start with the wrong things first. So this means a person would start first maybe by funding accounts without having the right skills, the right knowledge. We just keep chasing, wanting to make money. And that's the wrong idea to actually have when it comes to approaching trading. So how I approached trading was I was willing to learn, experience, and then trade and officially trade. So I broke a year in about three quarters. So it was, I think, 3 months for me to learn the pros and cons, the art behind trading, the psychology behind it, and all that type of stuff. And then I took 6 months to practice. So this was experiencing. Practice meaning trading on a demo, here and there and whatever. After that 6 months, I took another 3 months again to actually just get a grip of how it is or how it feels to be on a real account. And then that's when I kind of flipped accounts. I started seeing a progress until 2 years back when I got introduced to prop firms. That's where my life drastically changed entirely, because obviously I was undercapitalized, so I didn't have enough capital to make me wealth. But after knowing prop firms, I used to fund like $1,000. I used to fund like $5,000. Imagine if I can access a $100,000 account with just $500. So for me, that was an investment. So I just did that. And then eventually everything started broadening up, man. It was just amazing, piece by piece progressing and all that type of stuff. It was just an amazing journey. I don't want to lie to you.
Okay. So you obviously must have focused on a particular style of trading. What was you're a fundamentals guy, technical guy? What's your strength?
All right. So I'm actually a pure price action trader. So I'm a pure price action trader. But I recently merged pure price action with smart money because I realized that in order to understand pure price action, you have to understand how liquidity is involved in the market. So once you mix these two, it kind of took my profitability. I think my win rate was about 77, and now it's at about 95, somewhere there, 95. Because I also know, the FundedNext community was really shocked that I made $20,000 from just a 100K account. They didn't expect that. And it was also just a 100% win rate. They were just like, how did you do that? So we would like to interview you. That is why I agreed to it, because after merging these two things, it kind of made my strategy more tweaked, or to say more profitable than ever. So I'm a pure price action trader. I hate fundamentals to the core. I don't trade fundamentals. It's too risky. It is unnecessary adrenaline. I just focus on technicals, pure price action, liquidity, and that's how I actually get to master the entire thing.
Okay, so you're a smart money trader. So you trade price action, you trade liquidity. So what are you trading? Indices, FX, commodities?
I trade. Okay, I'm also smart in that department because I realized during my progress journey that flooding myself with a lot of pairs, a lot of indices, is just literally messing up with my psychology. So what I did was I only trade five things. I trade gold, Euro USD, GBP USD, GBP JPY, and USD JPY. These are my main five pairs I only trade.
Right.
So
Okay.
gold, I love it because it's volatile. It's volatile, and I also kind of I got a crack behind how it maneuver around it. And then obviously the other pairs, I like them mainly because they are kind of like related to the dollar index. And I use the dollar index to kind of switch up my mindset to what's approaching any dollar related pair. For an example, USD JPY, GBP USD, or Euro USD. So I just know it helps me to kind of find my urge towards executing my trades. So yeah.
Okay. So what smart money concepts do you use then?
What smart money concept do I use?
Any
In what
particular
sense?
one?
Not really. As I said, I'm actually a pure price action trader, right?
Right.
But I just merged pure price action with smart money. But how smart money comes in my strategy is because it has a better understanding on how to approach liquidity. Yeah. So basically, my approach towards that. Let's make an example. If a market is in a bullish structure, the first thing I would look for is where was the liquidity violated, or where was the low violated, or where was the liquidity sweep. And then from there, I will wait for a break of structure, but still in respect of the trends I've built of pure price action as in the bullish market. And then from there, after the break of structure, I will wait for maybe the retest at a certain area for me to get my entry. So in this way, liquidity in smart money concept, it kind of like helped me to understand it better. I now understand how liquidity gets in the market, what happens for there to be liquidity in the market, and stuff like that. But entirely, I'm still a pure price action trader.
Okay. Do you want to share a screen? Maybe see if you can explain how a trade setup would happen.
Okay, wait. The thing is, I'm using my iPad here, so let me try to check if I can do it.
Difficult to get an idea of your strategy, your style, without seeing some kind of some kind of chart. Maybe would help.
All right, let me share my screen. Currently, I'm in this trade. I'm in the GBP USD trade, right? But it just spiked in and it's just spiked out, so it's just really playing out a lot. But I'm gonna just go to the chart whereof today I actually hit take profit on gold. This is what I mean. So, for an example, as I said, I'm a pure price action trader, but as well I mix it with smart money. So with pure price action, we know we have to understand structures. The reason why I have this bullish market, right? Mm-hmm. And after I did that bullish market, in this instance, when the market was somewhere right about here, this for me was a liquidity sweep until the market started going upside down. So this means this was a break of structure. The market had to come back to respect that level at the top right there. So how did I get this entry right here? So it's actually on the lower time frame on a 15 minute. So on a 15 minute, if I drop it on a 15 minute, you would understand I use a fib retracement in order to get my entry. So how did I do it? Was I took my fib structure. I'm just going to do it again so that everybody understands. I'm just going to do it again. So I took my Fibonacci. So my Fibonacci is actually the one that helps me get my actual entries at the moment. Because why? If I understand the low of the day and also the high of the day, it kind of like helps me to know where is the next market retracement going to come. Because as you can see right here, this is the 71st level and the 79th level. So in between these areas, this is where the market would actually retrace. But it actually spiked in, as you can see. I'm just going to zoom in this price right here. As you can see, this was maybe mid-morning. I was sleeping at this time. It spiked in right here, and then it started correcting towards the upside. Naturally, I know that if the market corrects, there has to be an impulse. So after it corrected, an impulse to the downside, this is where I actually executed my entry because this was like 9 a.m. in the morning. And then I knew that from this, now we have a double bottom. That's price action now. Now we have a double bottom, and then the market impulsed up. After breaking this was when I confirmed this structure as a break of structure. So from that moment, I just knew that the market has to continue until further that top to respect my level right here. And then that's actually what the market did. I would show the profit, but unfortunately, it's not a good platform for that. I just wanted to show you guys how I actually do it. So as you can see, that was the break of structure, a retest, double bottom, continuation to the upside, and I actually hit that take profit. So that's actually how I just approach my market all the time.
All right. Well, that's pretty simple, to be honest. I mean, that's just, yeah, that's ICT 101. Okay.
I try, man. I try. The simpler, the better.
Okay, so you're simply looking for a break of structure, and then you look to ride that move to the next swing
so
high
after the
or
break of
liquidity
structure,
pool.
yes, sir. It's more like that. So I just know that after a break of structure, there's a lot of liquidity that's coming into the market at that moment. So what I have to wait for is I normally say it's more like a car. For a car to drive, sometimes you have to drive the car from your house to the gas station. After getting gas, that's where you will drive to your location. This means the market needs to at least show a movement before it relaxes a bit. That's where the impulse comes in, and then the pullback comes in. So on the pullback, this is an example of a car where it pours gas into the car. And then when it moves again to the next location, this is the destiny where the market was supposed to go. So that's how I just look at it. I just say from this driveway to there, then from there to there. And I'm like, oh, okay. Sure. So now we are in the moment where we are pouring gas. And pouring gas, that's where we get a pullback, a retracement or stuff like that. And I just know, okay, cool. So since we did this, the next movement, where would it be? Are we on full tank or are we on half tank? This is where I kind of understand where the premium prices could be or where the discount prices might be. Now I try to work around that. As soon as I get that right, then I move forward again.
Okay, all right. That's pretty good stuff. Maybe you could share your FundedNext dashboard just so we could take a look.
Oh my word! My FundedNext dashboard. I'll have to log it on the website first.
I mean, there are people out there studying ICT for 5-10 years who never quite managed to be profitable. And you've managed to take break of structure and turn that into a profitable strategy. That's quite something.
I mean, as I said, I try not to follow the metrics. The metrics always says one thing all the time, and I'm just like, I'm not about to do that. Like, I would never follow like the metrics and stuff like that. Nah.
Yeah, but the market algorithm is a complex thing. There are many cycles running. It's not something that can be conquered overnight.
That's true. But would you agree with me when I say that's a choice, though? Would you agree with me?
Yes, it's a choice. It's a choice. If you decide that you can do it, yes, of course. That's the right attitude to have, of course.
Yeah, so let me just share my screen.
Yeah, we can see your the FundedNext dashboard now.
All right, there's my
what was this? Okay, so this was a 100k account, I presume.
Yes,
was
sir.
It? Yeah. So then, all right. So win rate 54, loss rate 45. Yeah. Okay. Good stuff.
And then you could see currently
risk reward 1 to 2. Yeah. Okay.
Mm-hmm.
Great.
And then win rate 54, loss rate 45, profit factor 3.5. Best trade
2, worst trade 1.
Worst trade $1,000.
Yeah, that fits in well with the risk to reward. Longs, yeah, okay. So, yeah, nice.
So,
okay.
Yeah, as you can see as well. Let's see.
You like cable by the looks of it.
Yeah, so it's like normally, as you can see also here, like on my worst trade, it's $1,000. Like, my win risk, my risk reward ratio is, if I can lose 1%, at least I need to make 2%. So it covers the loss and it puts me 1% ahead.
Yeah.
So that's
you're
how
you're risking 1% of the account every trade, are you?
Yes, sir. So as you can see, let's go to the analytics. This is how it was. You see, so this is how it was. It's just a fluctuation. We went back right here, and then simple stuff. That moment, that's where we hit the first payout. So in the first payout, obviously I have to drop back again. This was the first payout I had. It was on
looks like you had a great day on November the 13th. You made 20k.
Yeah, and then just right now it's almost like 15 and stuff like that. As you can see, GPUSD was actually the one that made me have this high win rate. At that level, I think I was trading everything until I tweaked everything.
Just out of interest, what was the trade on the November 13th then? How did you manage to make 20k?
Actually, it was CPI, I think.
Oh, okay. You were trading the data.
Yeah, it was.
Okay.
Let me
Yes.
check this. So on that day, I think it was CPI, because what was happening is I was on dark mode. I was off the media. I was off everything. I just wanted to focus on my trading and nothing else. And then one time I go home. As I go home, I think I had Euro USD on 7 lots on two trades, 7 lots. So it entirely was 14 lots. And then I had gold on, I think I had gold on 6 lots, if not, because each position was two lots.
Jeez.
And then
So if this had gone against you, you would have blown your account.
No, I wouldn't have, because obviously, as I said, I only risked 1% on all trades. In as far as I made it be like two lots. Each position, if I had lost, I would have lost $500.
Oh, okay, so you're stacked in.
Yeah, so more than like opening a huge lot size, I just chose to just shorten it, because that allows me to scale out some profit.
Yeah.
So this what I mean is, sometimes if the market goes in my direction, I know I can just close one position and then maybe let the 2 run. Once it moves again, close one position, let the other run, continuously like that.
Yeah. I understand. So you
so that's what I did.
You slowly fed in, you build up your position over time, and then CPI obviously moved in your favor, and that was 20k.
Yeah, so that was the day. And then I think CPI hit, it was about 8 o'clock South African time. Woo. The market froze for a second. After the market froze for a second, I thought I blew the account. When it opened, I was running $25,000 profit. I was like, what?
Yeah, CPI is the one. That's the one that does the job. Yeah, every month.
Yeah, I was like, holy no. How did I do that? And then obviously now there's a lot of volatility in the market. I'm trying to close all the positions and stuff like that. And then it kept on dropping. I think I closed it about $22,000. And then obviously on the payout day, you receive your 15% on challenges, on both challenges, and then you receive your refund again. So that's what compounded the price to be on 20,000 payout.
Okay.
Yeah.
Nice. That was a good day for you. Great. Okay. So you're planning on trading most CPI days now, I imagine?
No. As I said, I don't like news. Because here's the thing. On that day, I didn't know it was CPI until my community alerted me, I think when it was 5 minutes later, because we had 2 positions running. It was gold and Euro USD. Euro USD was on $5,000 profit. Both of the executions, 7 lots, they were both on $3,000 profit. So this means it was on $6,000 profit as a 14 lot. And now gold was running at a low price, man. There was about $500 each profit, each position. And then when CPI hit, this is where tables changed. It was insane. Yeah. I don't want to lie. Yeah, it was just crazy. I couldn't believe it myself.
Great stuff. All right. Well, thanks for your time. I better cut it now. I've got another meeting now. So
no problem.
Thanks for telling us your story, and good luck with the funded account.
I appreciate it, man.
All right.
Appreciate it. Thank you so much for having me.
Keep an eye on the news. Yeah, things can change
I definitely will.
quickly.
Thank you so much, man.
All right. See you. Bye.
Bye.